Today, we're going to tackle something that seems super intimidating, but is actually the key to understanding how business really works. We're talking about financial reporting. Think of it as the secret language of business.
You know that feeling, right? You open up a company's annual report and it's just this wall of numbers and jargon. It feels like you're trying to read a different language. If that's you, trust me, you are not alone.
But here's the thing. Buried in all those numbers is a story. It's a story about the company's health, its wins, its losses, and where it might be going. You just need to learn how to read it. And today, that's exactly what we're going to do.
So how do we get started? Well, we're going to use one simple idea that makes everything else fall into place. We're going to stop thinking about this as boring accounting and start looking at it like a company's annual health checkup.
Seriously, this one little mental shift is a game changer. All of a sudden, these complicated terms start to make sense. The numbers aren't just numbers anymore. They're like vital signs, telling us exactly how that company is doing.
And in this health checkup, there are really two main charts we need to look at. First, there's the statement of financial position. Think of that as a snapshot, a photo of the company's health on one particular day. Then you have the statement of profit or loss. That's more like a movie of its health over the entire last year.
All right, let's dive into that first one, the snapshot. This is where we get to see what the company is actually built on, financially speaking.
So what is this statement? It basically answers one simple question. On this one specific day, what does this company own and what does it owe? It's a freeze frame of the company's financial worth at that very moment.
And here's the golden rule that holds this whole thing together. Everything you see is based on one simple equation that can never, ever be broken. What the company owns, we call those its assets, has to equal all the claims against it. And those claims come from just two places, what it owes to other people, its liabilities, and what's left for the owners, which is their equity. It has to balance always.
So let's start with assets. These are all the goodies, all the valuable things the company controls that are going to help it make money in the future. You can think of them as the engine of the business.
Now, assets basically come in two flavors. You've got your tangible assets, that's the physical stuff you can literally touch, like a factory or a delivery truck. And then you have intangible assets. These are super valuable things you can't touch, like a powerful brand name or a patent for a cool invention. Both are absolutely critical. Okay, on the flip side of the equation, we have liabilities. Let's not overcomplicate this. It's a fancy word for debts. It's all the stuff the company owes to other people and will have to pay back eventually.
And honestly, the best way to get this is just to think about your own life. A company's loans are just like a mortgage on a house or a car loan. They're promises to pay that have to be kept. Simple as that.
And that brings us to the last piece of the puzzle, equity. This one's really important. If the company were to sell off all of its assets and use that cash to pay off all of its debts, whatever is left over, that's the equity. It's the owner's slice of the pie, their ultimate stake in the whole operation.
Okay, so we've looked at the snapshot. Now it's time to watch the movie. The second report tells us the story of how the company did over the whole year, basically what it brought in versus what it had to spend.
And that's the job of the statement of profit or loss. Unlike that snapshot we just saw, this thing covers a whole stretch of time, usually a year. It's the video of the company's financial journey, not just a single photo.
And the story it tells is actually really easy to follow. You start at the very top of the revenue. That's all the money that came in the door from selling stuff. Then you start subtracting all the costs of running the business. You know, paying for materials, salaries, rent, all that. And what you're left with, right down at the bottom line, that's the big one, profit.
A great way to think about it is that profit is like a measure of the company's energy for the year. It's how much vitality it generated. And here's the really cool part, where it all connects. That profit doesn't just vanish. It actually gets added to the company's equity on that first snapshot we saw, making the owner's stake even bigger. See how the story of the year updates the snapshot for the next year?
Okay, that makes sense when things are going smoothly. But what about when things go wrong? What happens if one of those assets we talked about, say a giant expensive factory, suddenly isn't worth as much as it was? How does the story handle that?
This is where it gets really interesting, because this is where our two documents talk to each other. Let's walk through it. Say a company has a factory on its books valued at $1 million. Then boom, a competitor comes out with some amazing new tech that makes the old factory way less efficient. The company looks at it and says, oof, we can probably only get about $600,000 out of this factory now. That $400,000 drop in value has a special name. It's an impairment loss, and it's treated like an expense for the year,
which means it directly reduces this year's profit. It's how the financial story accounts for a tough business reality. So, we've gone through the snapshot and the story of the year. But so what? Why does learning this secret language actually matter to you in your everyday life?
Well, because it's like gaining a superpower. It's not just for accountants. You can make way smarter decisions about where you invest your money. You can get a real sense of how healthy your own employer is. You can read a news headline about a company and actually understand what's going on behind the scenes. You could even start your own business with so much more confidence.
So at the end of the day, here's what I want you to take away. These financial reports, they don't have to be scary. Once you see them as a simple health checkup with a snapshot of what a company's worth and a story of how it performed, you have the basic tools you need to decode the whole thing.
So next time you see one of those reports, don't just see a bunch of random numbers. Look for the story. Because now you know the language. The only question left is, what stories will you go out and uncover?